Hey traders, this is MACDaddy Trader. Welcome back to another episode. Today we're going to show you how we can go from this code all the way to a really great list of stocks that you can pick from for your own accounts or portfolios and things like that. This is not financial advice. I'm just showing you what I do. And this is kind of like a little tutorial into leveraging AI and Google Drive, Google Colab, some Python script, and just being able to scrape some data from websites and create your own basically outline of how you want to pick something. The first thing I wanted to identify is Sortino ratio. Now, a lot of modern portfolio theorists like the Sharpe ratio because it covers all volatility, basically standard deviation going up and below. However, Sortino, in my opinion, and again, this is not financial advice, but this is how I like to do it. Sortino only punishes the downside volatility. It does not punish the upside. So when you get these rankings, and we can sort these and filter these. This is just a Google sheet, nothing fancy. But I did have to go through several iterations to get to my final list that I'm still filtering down. But yeah, I did Sortino ratio. Alpha is basically the gain generation. So this is what you're looking for. Everyone talks about seeking alpha. They're seeking profitability. So essentially, this is how profitable this stock has been throughout its entire backtest history based upon the parameters I set. Beta, I added beta in here because I wanted to find some stocks that maybe had a little less beta so they're not as correlated to the market dynamics. I also created these two categories, upside capture and downside capture, which I also created a trading view indicator that calculates these. So if you want that, follow me on Discord and I can get you those. But I've started making a few that are specific to stock picking. So right now I got upside and downside capture, and these basically they take the gain or the loss for the day and then add it up over time. Capture difference. So I did this manually. Basically, your upside minus your downside gives you your capture difference. Next is debt to equity ratio, basically how much debt per unit of equity that company has. It goes into this. Current price, just your current standard price that it closed at the last day. And market cap, backtest start year. Exchange, I only have NASDAQ and New York Stock Exchange. I figured that was a good chunk to work with. And then this is my chart look. So it's very discretionary, but basically if it did not have hardly any huge downturns during massive shock events, then it went into my blue S tier. And then if it had, standard reaction to shock events, but still not a lot of volatility overall, I put it in my A tier. So that's the color differentiation. So I had some orange and yellow and red, obviously. After I filtered these down to what I wanted, I did a quick chart look of each one of these and just said, hey, if it looks a little nasty, or if it has some big drops down to like the 5.4 ATR or even the 8.1 ATR, I didn't want to have anything to do with it. A lot of these S tiers, they barely just tag the 2.4 ATR, and that is also an indicator that I have on TradingView that I still think is active, but it's based off the NinjaTrader day trading Sky trend bands that are available in my Discord as well. After that, I went ahead and asked Grok, to identify these into sectors. And so I just added that, and it gave some nice notes here all the way down. But let's go ahead and go through how we got to this part. So, first thing that I did was I went to Grok. I basically said, all right, these are the parameters that I want, and I want you to go ahead and implement it into a Python code that I can use in Google Colab. Pull from my stock ticker list. I got New York Stock Exchange tickers and NASDAQ tickers that I had to pull from outside sources. I think I pulled this from the NASDAQ.com website, and then this I pulled from the NYSE, or maybe it was Yahoo, one of the two. But I had to do that first. And once I did that, I set them here and I named them. And then I did a call out, and I told Grok to go ahead and say, basically put all of the data that I asked for into this spreadsheet, which is also in my category. So I told it to put everything into this spreadsheet here. And when you look at it, it's very raw. It has all the tickers that I asked for. I told it to filter out anything less than 2 billion market cap. So it did that, and it also filtered out stock data that's less than 252 days. So that way I could get a full year of trading data. And it also created some benchmarks because, again, we're utilizing alpha, beta, upside, downside. All of those require us to have a S&P or SPY benchmark. So that's what we did. This is how it's going to look. So ticker, Sortino, alpha, beta, upside, downside, debt to equity, current price, market cap, backtest start year. And then it gave error processing just in case if something went awry. Now, what this did is it pulled from Yahoo. So there are a couple things. It needed to import Y Finance and import the pandas and import NumPy. So when it did that, it authorized everything, and it had to get authentication to access my my Google documents or sheets, as it were. And so if we scroll down to the actual execution of the, you would click here once you have the code in, and then it would populate. It would start going one after another, and a couple of these, they would get cut out because this only had 37 days of data. This had 0. So it would filter out a lot of, companies that either don't exist anymore or are less than 2 billion, like right here, or they don't have enough days matching. So for instance here, 68 days, 54 days, 0 days, 0 days, and it just went through all of these. If you like this video, go ahead and give it a thumbs up. Don't forget to like, comment, and subscribe. Hit that notification bell so you can be one of the first people to watch the next video. Thanks for watching, and I'll see you next time.